You're investigating a reverse mortgage right at this very instant, and you just want to know, hey, how much can I get out of this reverse mortgage? Well, this is the video that you're going to want to watch because what I'm going to do here is we're going to break down different ages. So we're going to go age 55, which is the minimum age to get a proprietary reverse mortgage, 62, which is the minimum age to get a hecm or government reverse mortgage, 72, 82, and 92. And then we're going to look at different home values. We're going to look at 400,000, 700,000, a million, and $2 million. Now, I'm not a mind reader. I don't know how old you are, and I don't know how much your house is worth. In fact, we can, what was this? A month and a half ago, I closed a loan for a 101-year-old lady. So you can't be too old to get a reverse. By the way, she needed home health care and a little bit of help. Terrific, terrific deal. And it made me feel so good that we saved her, and she's going to be in her house for the rest of her life. But anyway, minimum age is 55 and 62. Maximum age, there is none. Maximum home value, by the way, there isn't one either. I've helped folks with $5 million homes. I've also helped folks with $100,000 homes. So home value doesn't really matter there. Just in the interest of time, we're going to do from 400,000 to 2 million because that's where the majority of the folks that I see kind of their home values land. But if your house is worth more, your house is worth less, certainly glad to help you. All right, so my name, by the way, is Jason Eichmiller. That's me in the picture right there with my family. It's actually taken, we did a nature hike on my birthday. That's my wife, Bridget. Alyssa's my 13-year-old, Jason's my 11-year-old, and Molly is my 9-year-old. And they are why I work so hard and do what I do. My contact information is below, by the way, if you have any questions or you want to reach out with kind of to see if a reverse mortgage can work specifically for you. And we can go over scenarios. We can go over the fees, the rates, all that stuff. So my phone number is 888-309-9705. It's right here, there. You can email me if you have a quick question at jason@keyhomelending.com. Or if you'd like, if you want to schedule a time to talk, you can go to my website. It's reversequotes.com. There you can put your information in. This is weird. Sometimes a slideshow just like goes on. So you can put your information right in there on the right to schedule a time to talk. And if you want to see what other seniors feel about reverse mortgages and seniors that I help, that's me interviewing a few folks that I've helped. That's Jerry on the top right, Catherine or Jerry on the top, Catherine on the bottom right, and then Maureen, who's actually an attorney and the daughter of a client I helped on the left. And there's a whole bunch more videos and written testimonials and things along those lines. So, oh yeah, they're testimonials. Not going to go over this too deep. Michael and Oscar are actually friends. I helped both of them. Michael referred me over to Oscar. I don't know why this thing is, let's see, can I pause the slideshow? I don't know. Anyway, so we might be going back and forth, but if you want to read it, go ahead. And these are awesome reviews because when you go through this, when you hold somebody's hand throughout the whole process, and you know that they're in a better place, that really feels good. So now let's get into how much money you can get out of the reverse mortgage. That's what you're here for. But first, you got to understand how we calculate reverse mortgage loan amounts, and you understand two of the three. There's three main ways. There's others, but like 10,000 foot level, there's three main ways that determine how much you can get out of a reverse mortgage. Number one is age. You know this. Number two is home value. You know that too. But number three, what do you think the third thing is? You know what? Comment what the number three thing that determines how much you can get out of a reverse is. Comment below. Let's see what you think. Go ahead and put pause on this. I'll still be here. So the third is interest rates. Now, here's the deal. We know that since for about a year and a half, the Fed has been in, I'm not going to go too deep into this, by the way. I don't want to bore you to death. But over the past year and a half or so, the Fed has increased interest rates. They've gone up and up and up and up and up. And this is kind of a chart since, 2020. See how low the CMT was and how high it is now. And by the way, that the CMT, if you're really interested in how the interest rates are determined, you're going off of the 1-year CMT. Most of you won't care about that, but there's probably one or two of you who had that question. So this year, if we break it out a little bit, you see that we went up a little bit, then went down, and we're a little bit higher than we were about a month and a half ago. So now the big question is, excuse me, when interest rates increase, what happens to loan sizes? When rates go up, do loan sizes go up or do loan sizes go down? You know that when interest rates increase on a regular mortgage, the payment goes up, and when interest rates decrease on a regular mortgage, the payment goes down. But that isn't really applicable with reverses because you don't have to make payments. So when rates go up, go ahead and comment again. Put this video on pause and comment below whether you think if rates go up, whether you'll get more money or less money. While I take a sip of water. My throat, excuse me, my throat is parched. You can probably tell I sound like a frog. So, your answer is, excuse me, when interest rates go up, loan sizes drop. So loan sizes now are lower than they were a year and a half ago. Now, no crystal ball here, but we think that especially as we get to 2024, we're going to start to see the Fed ease back on their interest rate hikes, which means rates might actually rebound and drop. So what does that mean? That means loan amounts might start to go up again. All right? So just so you know, that's kind of the relationship between rates and between loan amounts. So, yes, I know that stuff's pretty dry. But thank you for hanging with me on it. We're going to get to the good stuff right away, but I wanted to give you a background. So not just I don't just want to tell you this, but I want you to understand how this stuff works. Now I'm going to break the rule. Actually, I'll move myself over here so you can see the whole chart. Now, we're going to go, this is why you can't just go off of interest rates though, because if we look at a 72-year-old with $1 million home value and compare the loan sizes now from January, you can see that the 1-year Treasury rate went up a little bit, but also breaking the rule, the hecm and the proprietary is giving you more money now than they did in January. So you can't always take this as a complete rule, but what you can do is you can assume that if rates go down 0.5% or a full percent, then you're going to have more money to take. And if rates go up 0.5% or a whole percent, you're going to have less money to take. All right, I think I've beaten that horse dry. What is it? What do they say? Beat a dead horse? All right, let me see if I can move myself over here so you can see all this stuff. All right, age, I'll move myself here. Age 55, how much money can you get? So first of all, what you probably understand is with a hecm, you have to be 62. With a proprietary, you can get it at 55 or older. So the hecm, that's why it says NA. So if we look at it, and I'm not going to go line by line because that'll bore you to death and it'll take forever. But you can, and if you want to see, if you want to just dive into this and write anything down, go ahead and push pause on the video. I promise I'll be here when you hit play again. All right, home value $1 million. It's about 28%. Okay, if you're 55. Your proprietary reverse is going to return somewhere between about 26 and 30%. Okay? So now, age 62. Now, the hecm is in play. So one thing that you will find that at least up to about $1 million or so, the hecm is always going to outperform or at least right now with interest rates where they are right now, the hecm is always going to outperform the proprietary at every single age. So you can see that at $1 million right here, the hecm's giving about 32%, while the proprietary is giving 30%. Just 2%, but I mean that's $20,000 or so. That's a decent amount of money. Now what I want you to do is put on your thinking caps though. Why do you understand, and if you're a newbie you won't know this, and I'll teach you this a little bit later towards the end of the video, but why does the hecm drop off a cliff after $1 million? It barely, at $2 million, it barely gives you more money than $1 million, whereas the proprietary keeps going up. If you think it, go ahead and comment below. I want to see what you think on it. So that's age 62. Now, time for cartoons. We can't be this dry all the time. So look at this. The guy's taking a selfie with the Reaper. Before you take me away, can I at least get a selfie? I'll update my profile picture. I like this stuff. All right, age 72. You again see the hecm is outperforming the proprietary up until $1 million, and at $2 million, the proprietary is beating the hecm. However, what I also want you to understand is as you get older, look back at $1 million home value with the hecm at age 72, it's 38%. But if we go down to age 62, it's 32%. So, and this is probably, again, if you've watched my videos before, you understand this, but if you're new, this is might be new stuff for you. As you get older, you get more money out of a reverse mortgage. So, older you are, the more you get, the younger you are, the less you get. Okay, lesson over. 72, we're done. Another joke. Cindy Constellation, he slipped away peacefully. Get it? The banana peel? He slipped, and I guess this is Mrs. Banana Peel because she has lipstick. He slipped away peacefully. I love it. All right. Can't be too dry. Again, you can't be too dry with this stuff. All right. Age 82. Now you can see again. At $1 million, now at age 82, the $1 million reverse mortgage, the hecm is performing at about 47% versus 41% on the proprietary. That's, or I'm sorry, not 41%, 45%. I had to look down for a second. So 47 versus 45. And again, you can see the difference between age 72, 38%, and age 82, 47%. That's 9% as you get 10 years older. Now, age 92. Look at this. 61% on the hecm, 49% on the proprietary. But again, this $2 million, it dropped off of a cliff. So now here it's time for your answer. So why does a hecm kind of plateau? I shouldn't say drop off of the cliff. Plateau is a better way of saying it. Why does a hecm plateau after $1 million? Well, with a hecm, which is the government FHA reverse mortgage, you have a maximum home value of $1,089,000 and some change. So, if your home is worth $1,089,000, you are absolutely maxing out the hecm's proceeds. Once you see 1.2, 1.3, 1.5, 2, 3, 4, $5 million, the proprietary starts to get more powerful than the hecm. Okay? So just understand, if you have a $2 million house, depends on how you want the money as well. We'll go into that in a second. I think if you want to, like, figure we got a couple minutes to go over the differences between the proprietary and the hecm. But as you get if you have a $2 million house, if you want a lump sum, let's say you need all the money, maybe you're looking to buy an investment property, work with folks who are looking to do that. Maybe you're younger and you want to buy a business. Maybe you want to sock away some money, whether it's life insurance or investments. By the way, I cannot recommend that, of course. The government doesn't want me to recommend that. But, as they say, different strokes for different folks. So if you need all the money right away, then the proprietary is the way to go. Now, the proprietary also has a line of credit, but the proprietary line of credit doesn't really grow. So you can do a line of credit with the proprietary. It's okay. If you don't need the money right away and you have a $2 million house, then it's a good thing to do. But there's also some, put it this way, the proprietary line of credit, now we're getting down a different rabbit hole, but the proprietary line of credit, it ends after 10 years, so you only have 10 years to take the proprietary line of credit. Now I have folks who still do it with the multi-million-dollar homes, but I just make sure that you're very, very cognizant, you're very, very aware that you've got to, what do they say, use it or lose it. You've got to use the money within 10 years or the money goes bye. Also, proprietaries aren't in every state, and the proprietary line of credit is in even fewer states. So if you're interested in that, if you want to know if the proprietary is right for you, then go ahead and drop me a line, and I'm glad to look at your situation in the state you live in. tell you which, at least what I think, based on my experiences, what I think would be smarter for you to do. Here's where the hecm is powerful. The hecm is very powerful, and we use the example. Forget 92, that 101-year-old lady closed. We helped her with a reverse about a month and a half ago. So she had a $1 million house that was free and clear. She needed home health care. She was on fixed income. So with the traditional hecm, it is as flexible as it gets. And actually it's smart financial planners. They actually invented it. I'm just using it, but they call it the Swiss Army knife of retirement. So why is that? For this lady, Mary, we gave her some cash up front just to pay her bills because she was kind of back on a couple things. We gave her monthly income because we calculated out, okay, outside of the home health care, how much money do you need every single month to just stay even? So we gave her that, and then we added more for the home health care. Then we set up a side escrow account with the reverse. And this is all stuff that the hecm reverse can do. We set up a side escrow account to pay her property taxes and homeowners insurance for the next few years, which actuarially is her life expectancy once she hits 101. So we had an escrow account for taxes and insurance for life, so she doesn't even have to write a check for that. Then she had more money left over, so she had all this extra money that we just threw in a line of credit that grows forever, or as long as she lives. And the growth's pretty aggressive right now. The growth's almost 8%. So I felt like that, and I did a video on it, and maybe I'll link it below, but I felt like that was the perfect reverse mortgage. So obviously everybody's different. I don't think you're 101. Maybe your parents are, but there's a whole bunch of different reasons why folks do reverses. And again, if you need to be creative, sometimes people will do a line of credit to take out monthly income if they're 62, just so that they can push Social Security off to 70. That's another financial planning way that folks use reverses to push out Social Security. So anyway, whole bunch of reasons. What I mean to say is the hecm is very flexible, but you do want to take a look at the proprietary if you're pushing that 1.5 plus on home values and you need to maximize out all your cash. All right, that's that. So there you go. This is my contact information. Again, this is reversequotes.com. My name again is Jason. If you want to see if a reverse can help you, if you want to go through scenarios, figure out if you can qualify for it, or if you just have basic questions, feel free to get in touch with me. I love to help. I love speaking with folks, especially if you've watched a couple of my videos. It's great getting to know you. So feel free to reach out. My phone number is 888-309-9705. I've left my cell phone number there as well. You can call me on my cell. Feel free, but just try not to at 3 a.m. I appreciate it. You can email me at jason@keyhomelending.com, or you can go to www.reversequotes.com, this website right here, if you want to just put in your information. And two things. If you want to see what other seniors feel about how we work together on the reverses, or if you want to schedule a time to chat. So just go to that website. Either way, I appreciate your time. And if you do need help, if you want to investigate a reverse for yourself, for a loved one, a family member, a parent, or a client, if you're a financial advisor, if you run a home care business, or you're a realtor, if you want to discuss kind of how it can help your clients moving forward, feel free to reach out. It would be a pleasure, absolute pleasure, to get to know you. All right, that's it for me. We're at 19 minutes. That's far too long for this. I know I went on a little bit about the differences between the proprietary and the hecm, but just wanted you to understand. And anything you need, anything at all, feel free to reach out. Thanks so much, and have a wonderful day. Take care.